All right, what's going on, guys? I just want to go over a few quick things here. We're going to be going over the trap setup and what I look specifically for the traps. I know I discuss them a lot, and I know I haven't gone into detail exactly what I look for on the traps. Uh, so we're just going to move this over. I will move it down. So when I look for a trap, you need a strong move in a direction, right? We've discussed this before. Pull back, and then a higher high. What's going to happen there is the EMA is going to start creeping up. Usually we'll bounce off the EMA and then make a higher high. But when we're looking for a trap, we're going to have that pullback below that prior swing here, right here. And when we do that, you want this pullback to pull back and separate from the EMA. I'm going to show you on the daily here what I mean by separate from the EMA. So, strong move in a direction. Shallow, it doesn't have to be a shallow pullback. A shallow pullback when you're on a faster time frame and you're continuing with the trend, right? Shallow pullback, you make that new high and then you pull back below that shallow pullback, right? There are situations where you start roping in, let's say on this, a bullish trend, shallow pullback, you start roping in these sellers during different patterns and you can get a deeper pullback, trapping in below other swings. Just because it looks like this doesn't mean it's only like this. You could also have a strong move up, couple pullbacks, you know, you can get a couple pullbacks on your way. And then, you know, just because it breaks below this swing here doesn't mean, okay, that's the trap, right? Price could continue below this one, maybe even below this one before getting us that entry on the trap. That just means we've trapped in sellers below here. You know, these are smarter sellers that are coming in below here. These are more sellers. These are the rookie sellers that come in down here, right? So ultimately what we want to have happen on something like this is once we stop these sellers out, once these sellers are stopped out, we want these sellers to fuel this move up, and then we want these sellers where their stop losses are to fuel the move up. You know, let's say they have their stop loss somewhere here. So every time price breaks, it fuels the move up higher and higher. Usually what will happen is these sellers will have their stop losses above here, right? So you'll have stop losses above here, which will get them stopped out and will fuel the move up, right? So this is a more complex trap because you're just trapping below each swing, right? Doesn't mean that it's trapping them. There isn't a specific entry pattern that I will actually go over on how I enter these trades and where I put my stop loss. So remember, as price is retracing below these swings, you want the EMA, you want price to separate from the EMA. You want to create distance from the EMA. That gets the sellers more trapped. We're going to go over that here, right? As you can see, let's look at price as we're moving higher, right? Anytime we separate from the EMA, you should know what an EMA is. It's just a calculation. This is the 21, right? So 21 bars gives you the average price and on how it's calculated, right? Look at how the distance between the EMA and the daily. Look at the distance, right? This is just kind of eyeball the distance. When we get a little extended from the EMA, we kind of pull back to the EMA. We start to get a little extended, we pull back to the EMA. But you want to separate from the EMA. Now this is a good trap right here on the daily because you have your strong move up. You have that shallow pullback to right here. Then you have your higher high. Look at us separate from the EMA down here. When we got all the way down here, we're pretty separated from the EMA. That means all the sellers that are coming in this area here, as we're separated from the EMA, are getting trapped. Ultimately, anybody that's shorting below this swing here, below this, anybody shorting below here is getting trapped. But what really gives you a good trap is the separation from the EMA. We strong selling down, separating from that EMA. We're creating distance from that EMA. So the way I enter the trade could be on any time frame. It depends on what time frame you want to trade on. But what I do is I will enter with a buy stop one tick above a strong closing green candle above the EMA. So this green candle breaks above the EMA, closes strong. I will enter with a buy stop. I'm not just going to slap the market because I want to know that the next candle is breaking above that candle, right? So once we break above that candle, I enter into the trade. Stop loss, it's not really a static stop loss. This is where stop losses should be. Yes, you can manage it differently. You can zoom in on a faster time frame. This is obviously a daily. We can zoom in to a 4 hour, maybe an hour chart. Let's say you were taking this as a swing position on this trap and looking for continuation in the bullish direction. So then you can zoom in on an hourly, 4 hour, 30 minute, however you want to manage that trade to put your stop loss, right? But if we're just strictly going off the daily, this is where my stop loss would be. Right below this swing, sometimes giving myself a little bit of room here. But if that gets into a failed trap. But we're just going to go over the traps. So strong move up, you have a pullback, higher high. We pull back below that shallow pullback or that swing here, and we separate from the EMA. That's a key point in this. I haven't gone over that. Separating from the EMA. We separate from the EMA, and that traps in these sellers here. Because these are going to be weak-handed sellers, and they're going to start stopping out. And as you can see, this candle starts moving up. They start stopping out, stopping out, stopping out. And then you get in on the trap, right? Buy stop market or buy stop limit. 1 tick or 2 ticks, a couple ticks above, just to actually get into the entry, knowing we broke above this candle. This candle is it's the signal candle. The next candle is the entry. So we enter on this candle. This signals the trap. This is the entry. So from there, we know this is the swing, right? So we're going to need this prior swing that we broke below to hold. We tick below it. We enter in, we wick down, and we come back up, and we close up here, right? Perfect. You look at the next candle. We're closing above, closing above, closing above. We are wicking below, but it's a battle. You can see sellers are defending. Sellers are trying. You can see right in here is a battle, right? Then if we zoom in a little bit further, you see these wicks up here. See these seller wicks up high? Those seller wicks up here gives a clear indication on where they're trying to defend and where their stop losses are. Obviously, we know stop losses are going to be above this high. Once we get above that high, you should get a nice little stop run. But once we got above these wicks here with this strong green candle, that's our signal that, yeah, we're going to continue. Once we got above this high, what do? We stop them all out. Nice, strong green candle closing here. But as you can see, we did not have a single candle closing below the EMA. Not a single candle after the trap was once we entered into the trap, we didn't have a single candle closing below the EMA. If we start closing below the EMA and coming down here, you got the setup is still valid, but you need to determine, is this worth my risk anymore? That gets into a little bit more complex when you get order flow, where's the liquidity. But strictly talking about the way the candles look, the levels we're playing off of, so we have our prior swing, we have to stay above. We have to keep ourselves above this prior swing. Put it on here just to prior swing. We have to stay above this, right? We stayed above, we wicked below, but we bounced right back up. Stopped out those sellers, and we continued higher. So this is a nice trap setup here. Yeah, I know it's the daily chart. You can use it on tick charts. You can use it on 5 minute, 1 hour, or whatever you wanted to use it on. It's going to be based off of your risk tolerance. But I always enter one tick above the candle that closes above the EMA. You need a strong candle. This is a nice, strong signal candle or a trigger candle. I think it's the signal and this is the trigger. But either way, this is the signal, strong close above the EMA to get into that trade. To go over it again, I know I'm beating a dead horse. Strong bullish move higher, pull back, higher high. Pull back below the previous swing of the pullback right here. Separating from the EMA. We separated from the EMA. That gives more sellers, more rookie sellers and other sellers to start getting roped into these shorts here. That'll fuel the move. That gets stopped out all the way up. And we enter one tick above the green candle that closes above the EMA. Knowing that we have to stay above this prior swing here for the continuation. Then we could see here, just looking a little further into it, we see the wicks of the sellers here, knowing that this is where the sellers are really trying to defend, but the buyers are holding it up. Then we stop them out, fuel the move higher, and then we continue in that bullish move, right? So that's a beautiful entry there. We're going to go over the current location of price, right? Current location of price, except this is, we will make this a little bigger. So we're going to thicken this up just to make it visually, a little bit more visually appealing, if you will. All right. So we're up here. Strong move down, right? That is a very strong move down here. From there, we pulled back. I'm sorry, let me adjust this properly. Strong move down from the high to here. Then we have our pullback to right here. Now we have our lower low. See that? See the white lines? Strong move down, pullback, lower low. From here we pulled back above the shallow, the previous pullback, the previous swing, right? So from here, anybody that is going long above here, they're potentially trapped. We're not going to say they're 100% trapped, but they're potentially trapped. This is going to be the previous swing now that we're watching. We're going to want to break. Oh, but hold on. Let me backtrack. Strong move down, pull back, lower low. Pull back above the previous swing, the previous pullback here, potentially trapping in sellers. We don't have a confirmation yet. But what did we just do? We separated from the EMA. Look at this separation from the EMA. And that's what I really want to like drive in today. Drive this one home. We're separating from the EMA. The EMA is right here. That's a 21 EMA. We're starting to separate from it. So from here, In order for this trap to get confirmed and get an entry, we're going to need a candle that closes below, a red candle that is going to close below the EMA. A strong bearish candle closing below the EMA, right? We're not going to get it all in one. Maybe we'll get it today all in one. But the reason why we want a strong candle closing below it is because we need to know where our entry is going to be, right? And we'll enter one tick below that, right? This would be entry. And then our stop loss would be above here. And once we get entered in here, right? Once we get entered in, we do not want a candle. We do not want to see a green candle, or any candle for that matter, closing above here. Once we start seeing a candle closing above the swing, then we got to question, all right, is this setup still valid? Right? If we get a green candle closing above this prior swing, we have to question, is this setup still valid? Of course, like I said before, you can go ahead and enter this and then zoom in on a 4 hour, 1 hour, because this is a daily, and then go ahead and determine where your risk is going to be. You know, you might find something that will invalidate this setup on a faster time frame. But right now, I'm looking, since we're up here, I'm looking for sellers to start coming in, start loading up into some positions, and buyers, as price goes higher. We could still break above here, right? This would cause another trap up here. More sellers or more buyers above this swing. You know, if price moves up there, we could also trap more buyers above here. But at the moment, we are potentially, it's not confirmed, potentially trapping buyers above this swing, that shallow pullback before we made that lower low. So everybody up here potentially is getting trapped. We know there's going to be, if this happens, a strong candle closing below the EMA, we enter 1 or 2 ticks below it. So we know we're continuing the move. The move wants to continue. And then from there, we want to make sure that we do not close above this swing, right? So that's the setup. This is a daily chart. I'm using this for sentiment moving forward, right? Previously, when we had this setup over here, when this setup presented itself and that trap got triggered, I was watching price action, and I remember these things wicking up because I look at the daily and I always look to see if there's traps triggered. They don't happen that often because it's the daily, right? It takes a lot longer for us to have a trap on a daily versus intraday. So when this happened, I started watching, and I was watching the price wicking up. I remember that. Anytime I was shorting, I was watching it wick up. So with that being said, if we get a trap triggered and an entry, technically an entry that would trigger, I'm not saying I'm taking it off the daily and swinging this, but if we get an entry that's triggered, I'm going to look for price, and I'm going to look for sellers to see if sellers are wicking price down, bringing price down. Every time buyers try to bring it up, sellers are smacking it down. I'm going to look for that. That's something that I'm going to pay attention to. So that's why I use it on the daily, just to see what the overall sentiment. We are extending off of it. We could get an entry down here. We might not. Who knows? But that's something that I'm looking at moving forward. Kind of wanted to go over this. Let's see if we have anything intraday here on the. Let's make this wider. Let's see if we have anything intraday here for traps. Not much really. Let's see the other day when we were. This is an example of a trap. We'll zoom in here. Just so you can see it on the daily, and then you can see it on the 500 tick chart, right? Strong move up, shallow pullback, higher high, right? We did not pull back below it, but look at this. Let's make this a little bigger again. This is going to be the, make this 4, apply. Okay. All right, so we have our strong move up here. We have a shallow pullback, and then we have a higher high. From here, we pull back below the shallow pullback. Here's the shallow pullback. We're below it. I'll zoom this in a little bit so you can see it better. See that? Strong move up, shallow pullback, higher high, or just the pullback, higher high. We pull back below the shallow pullback. Now, what do? We enter when? Or I enter when? This is the way I do it. I enter when we have a strong bullish candle closing above the EMA. So let's zoom in here. This one closed above the EMA right here, right? Okay. Do you want to take that or do you not want to take that? That's going to be up to you, right? But let's just say, for argument's sake, that you always enter. This is a strong bullish candle closing above on its highs, right? The candle is closing at its high. So let's say you enter one tick above that. One tick above here. You would enter on the next candle. So you enter right here. This would be our entry. The next candle, we wick all the way down. Our entry is at 19,652.75. So we'll put entry at 19,652.75. That's our entry right here. It wicks down all the way to 19,644.25. So the low, 19,644.25. We wick down to that. Now our stop loss would be below this swing here. So we enter at 52, stop loss below 32. So let's say our stop loss is down here at 31.25. That gives us, let's see what this math is. Right? Because everything's about risk reward. And this is where I say you got to know your risk, you got to know your reward. So you have 52.75 minus 31.25. It's a 21.5 point stop loss on this setup. Multiply that by 20, that's a $430 risk on one contract. If you're going in on 5 micros, you're at a $215 stop loss. And that's that's going to be 5 micros. So, if you take that into consideration, that's $43 per micro. So if you went into 1 micro here and you wanted to trade this, okay, so just know your risk reward, right? I look at that, I go, okay, you got to kind of calculate these in the moment. Okay, if this is my stop and we're entering up here, this is a 20 point, I go 20 points is $400. Okay, if I do half of that, that's $200 at 5 micros. That's kind of how I do my math, right? I know that 20 points is 400, 10 points is 200, and then I do my math from there. So that's how I do my risk reward. So just try to calculate your risk reward in the moment prior to entering the trade based off of this low. You can already do it, right? So if you're on this low and you're like, all right, I think we're going to start moving up, you can see the EMA is up here. You can start calculating your risk prior to even entering the trade as price is moving closer. But to backtrack, what did we do? We separated from the EMA, right? Every time we separate from the EMA, we almost always go back to the EMA. This is not good separation from the EMA. See the EMA, see how we're like right here? This is not good separation. I do not like that. Even though there is a trap there, you came up, shallow pullback, higher high. We pulled back below this shallow pullback here, right? Technically, this could have been a trap, but I do not like it because look at how close we are to the EMA. And this is where I say separating from the EMA is what I want to drive home. pulls back, but there's no separation from the EMA. That's why, you know, we had a little bit of choppy action. We eventually closed below that swing. Let's see right there. You know, we barely, but we fought it. This was a battle here. I didn't like this one. See how condensed it is. Close to the EMA. We want that separation from the EMA. This one here properly separates from the EMA. The more it separates from the EMA, sometimes we get the way price comes up, and then we get that close above. You get even more sellers trapped in. But right now we got sellers trapped in below this swing, separation from the EMA. We enter here at 52.75. And ultimately what we're looking for the first scale out is going to be a break above this high, which we did. We broke above that high. Now that we broke above that high, you can scale out. Move stops to break even, take the whole position off, whatever you want to do, right? But that is the ultimate goal. The ultimate goal is to get the full continuation, but breaking above the high is the first initial target. From there, we can reevaluate, which, as you can see, pullback, higher high. We broke below this pullback, and what did we get? Another trap entry going higher. But let's say your entry was here at 52. Your take profit was at the high, which is 77.5. So you have a 25-point reward, and you have 21 risk. So you got a good 1-to-1 here, right? So that gives you that. Now, that's intraday, how to trade these traps. This is another one. This is a good looking one here. I like this one. Love this one. When we're trending, this is my favorite way to enter. What we're going to do, we're going to draw another trap. And this will be the last one here. Right? We have a strong move up. We have our pullback right here. We have new high. Right? We ticked up to a new high. Then we have our pullback below what? Our pullback is below this location here. Right? Pull back below that swing. Most importantly, what else did we do? We started to separate from the EMA, right? This is separation. We're starting to separate from that EMA. This is not separation. Remember, this is not separation. I do not like this. I do not enter traps on this. This is separation. We're separating from that EMA. See the distance between the EMA and where price goes. This is starting to separate from the EMA, right? I like this. It is a little tighter, but you can see it's separated. This is condensing and then finally came down, wick back up. This is not really separation. I don't like this. But all the candles closing here, they're closing with some separation from the EMA. We wick all the way down to here. You know, we wick 85 down to 74, 10 points away from the EMA. And when we're trending on these tight trends up, you know, you got to determine what is separation. What's the average distance between the EMA, and are we actually separating? And we're separating in the opposite direction of the trend. That's what we're looking at, right? So let's go into entry, locations, and stop losses. So here we go. We have our first green candle closing above the EMA right here. Strong green candle. We closed at the highs of the candle, so that's a strong signal to get into this trap. So we enter on the next candle with a buy stop, or I enter. You can do whatever you want. I enter right around here. So we're going to say we entered at 19,690. Entry is going to be 19,690. Stop loss below the low at about we'll say 19,673. 19,673. That gives us what's our risk on that. As price is coming up, you can check your risk, right? You can say, okay, the EMA is somewhere around here at 85. Price comes all the way down here at 74. So we go, let's say 75, 85, that's a 10-point risk just here at the EMA, depending on where we close above. So then you can start kind of calculating your risk. So you have 90 minus 73. Risk of 17 points, right? Multiply that by 20. You have a $340 risk on one full mini. On micros, you have 170 on 5 micros. And then on 1 micro is a $34 risk, right? So that's what I'm constantly doing throughout the day. And if I say, you know, not worth the risk. So you have a $34 risk on 1 micro, and you have a 17-point risk on 1 mini, or if you're not 17, it's a 17-point risk no matter what, but it's a $340 risk on 1 full mini. So entry here, stop loss here, right? We're on a 500 tick chart, so this is as low as I go where my stop losses are. Where I put my stop losses, I don't zoom this in any faster. So here we go. What do? We want to watch for price to hold above this prior swing, right? So you have your higher high, your pullback, your high, your high, your pullback, your higher high. Your pullback below this swing, separating from the EMA. We enter after we get a strong close above the EMA. Strong close above the EMA. And here you go. Enter on the next candle, knowing that we're getting that continuation. We get that continuation, we pull back, and we wick down to the prior swing, right? We start wicking down there, but we're holding. We're not closing inside of it. This is a nice strong trap giving me signals that the buyers are going to actually continue this, and they want to continue this. From here, first target is going to be at this high here because we want to break a new high. We want to continue this trend, right? First target is going to be at 19,702. So 19,702. First target. That gives us a 12-point profit. 12-point profit, 17-point risk. A little less than one to one, right? But scale out. If you have runners, this might stress you out. But if you have runners, what do we do? We held here. I'm still looking at this valid until we start closing below here and start going down. Then I'm like, all right, we're looking at a failed trap. And then things can spiral out of control downwards. But we're still in a strong bullish move higher, right? This is a strong bullish trend. Trending higher. So from there, let's say you held a runner. Look at what happens. The power of traps with runners, right? Knowing your risk reward. All right, I took the majority of it off. I'm holding 1 runner. Holding 1 micro. So if you held a micro from this position, you know, let's say you entered at 690 and you held all the way through till, you know, let's say you held through until you started chopping around. Let's say you got out on the low here, chopping around. That's at 19,756. Let's say you couldn't handle it anymore. You thought we were going to reverse, and, you know, just for the sake of argument here, you never get out at the high. Let's say you got out at this low thinking it's going to break down. So we're going to say, you know, you got stressed out when you got out here at 19,755. 19,755, 19,755. And this is where you ultimately got out on your trade, you know, right around here. So you got in at 690, you got out at 755. 755 minus 690, 65 points on, you know, 1 micro runner. You just made another $130, right? That's why I use the traps, and I only use traps when we are trending. Trending higher, that's how I get in on my traps when we got a nice strong bullish trend. You know, and if you picture this as, let's say you were trading size with some minis, you know, that's going to be $1,300 on a runner, right? Great risk, great reward. Doesn't always happen that way, right? Because look at this one. We pulled back, made a new high, and then we came back below here. But just because that happened doesn't mean we're not going to continue, right? This could be a trap on a higher time frame. But that's what I do with the traps. The main thing I wanted to drive home here is the separation from the EMA. Separate from the EMA. This one here. This is a beautiful separation from the EMA. We separated from the EMA. If you know, we're getting a little messy here, but let's get this trade off, and I'll go over one more just to drive home the separation of the EMA, right? This is the move. Let's say we're working off of this strong trend because we just made a new high. Anytime you make a new high, you want to adjust, right? We have a pullback, and from the pullback, we made a new high up here. Get rid of these. So you can see it, right? Get rid of this trade here. You could always rewind this and go back and watch this again. So we have a strong bullish move up. We have a pullback, and we ticked above, and we made a new high. From here, we have a pullback below this pullback, right? We had a pullback below. This is the pattern. Pull back below here. This is this. You can see it, right? Looks the same. Now let's drive home the separating the EMA from the EMA. And that's what I'm really, I've said it a million times, but that's what I'm really trying to do here. When we pulled back below this pullback or this swing here, what did we do? Look at this separation from this EMA. This is beautiful. This is a beautiful separation from the EMA. This starts to make sellers happy. They start to say, oh, we're reversing. Where do you go? Oh, we broke this swing. We're going to continue down. Hold your horses, relax, wait, be patient. All right, so from here, entry pattern, the entry, I enter one tick above the close of a strong green candle above the EMA. We filled in this candle, right? We're closing near the highs of this candle. This is a strong candle. See this green candle? This one right here? I want to kind of point this out. This green candle here is not a strong close. That is not a strong close. We're closing below halfway of the candle. We have more of a wick. We close towards the low of the body, even though it's a green candle. So I'm going to enter one tick above the high of this candle. Right there. This is going to be my entry. We'll see at 47.50. 19.647.50 is entry. Stop loss. My stop is below this swing here. Or I'm sorry, the low of this pullback. And we're going to say that is 17. 19.617. All right, risk, right? Let's calculate this risk. 47.17, what is that? 30 points? 30-point risk. 3 times 2, 6, $600 risk, right? Am I doing my math correct? Let's check. 47.5 minus 17. Yep, 30 times 20, 610, right? Because it's 0.50. Because it's 0.50. So you have a $610 risk. Divide by 2, $305 for 5 micros. Divide that by 5, $61 per micro. So there you go. That's your risk. But what I do is, if I enter, or I think about entering, I look at the price. I'm like, all right, we're about 30 points higher. That's $600 risk. So from here, entry. This is going to be our swing. That's the pullback that we're trying to stay above. We didn't even wick down to it. This is a strong trap here. Notice we didn't even wick down to it. We came up to it. Yep, we found some sellers. Gets a little hairy sometimes, but this is where I do the same thing over and over and over again. It doesn't work all the time. It works a lot of the time, majority of the time, and my reward is usually bigger than my risk. And then here we go. From here, let's say you entered on that trap. What do? We take profits above or scale out above this high. First scale out is up here at about 19,681. And we're talking about, look at that reward. It's a nice reward in comparison to that risk. 81 minus 47, 34 times 20, $680, right? So you're getting a more of a reward on this one. So that's your first scale out. From there, price just continued higher, right? If you're holding a runner, what I do, and this is going to be this is more trade management and whatever. If I'm trading based off of the way price is moving with more size and I'm holding runners, I do not realize profits on my runners. I don't care about my runners. It is what it is. Let them go. I make more money off of my runners than I do on my normal positions sometimes. So that's the setup. Pull back, higher high, pull back below, emphasizing the separating from the EMA. We pull back, separating from that EMA, creating distance from that EMA. That gets more sellers trapped and fuels the move higher, right? So I just want to go over the trap. I know this is like 41 minutes long. I hope this kind of helps you guys when I talk about traps. And that's it. Let's see where we're at today. Still inside initial balance. There's the middle. Did break below. London closed. We sold down to the London low, the overnight London low here. And what we do, we get a failure set up to bounce us right back towards London high right here. And that's what we're floating at right now. Typical range style day, waiting for news, just balancing out here. But that's it. I just want to go over those traps. And that's it. Good luck, guys. Hope this helps.